FHA loans. You want to buy a house with an FHA loan. It's a great loan, but there's things to think about and know about. Now, if you don't have a lot of money saved up and your credit score is not perfect, this could be for you. We're going to break it down. Everything you need to know about FHA loans for 2025, how they work, who they're for, and what you should consider, and some negatives or some big cons that people don't tell you when you get into this thing. So we're going to give you the no fluff, the real deal about FHA loans. Let's get started. So Diane, what is an FHA loan? Federal Housing Association. It's a government-backed loan. It was created to help people buy a home. It's been around for ages. People who don't have a lot of cash or perfect credit. It's not just for first-time home buyers. It's for anyone who needs this help in getting a home. You can't have two FHA loans on each property. So you have two properties, you can't both have an FHA loan. So if you had an FHA loan on this property and you're selling it and you're buying one and you want to buy it with an FHA loan, you can do that. You just can't have two at the same time. Okay, so how they work? Well, you can get into a home with the low down payment. Usually they want at least 3.5%. Depends upon your credit. They want more if your credit's really low, instead of needing this big 20% down or 10% down up front for a conventional loan. It's just easier to manage your finances. Even if you don't need FHA, it's a great way of doing the loan program. So if you have a home that you're buying for $200,000 and you put that 3.5% down, you're talking about $7,000 compared to $40,000, say for a 20% down. That's a good option. It's kind of appealing. I know that's very appealing. Everyone loves it until I tell them the cons. Well, just hang in there. So if you have a $250,000 home, then you need $8,750, okay, to buy the house. And the best part about it is you can take up to 6% of the sales price and bump up the price and get that money in closing costs. So you can bump it up, you use that money, or say for $200,000, you bump it up to 6%, that's $12,000. So you're buying a house for $212,000, $12,000 of that goes towards paying your closing costs, right? You buy the house for the $200,000. It's a big con here. I'm going to go through it in a minute of why you might not want to do the FHA loan or do this, and I'll explain it to you in a moment. Now, if your credit score is below 580, they will want more down, like up to 10% down, which would be $25,000 on a $250,000 home. Still a lot less than the conventional 20% down. So it's very flexible. It's one of the big draws that people buy, why they get a loan, why they want this loan. Also credit score, maybe just you were on a car with somebody, they didn't pay it off and you co-signed and your credit got it messed up. It's not your fault and your credit score came down. Well, now you can buy a house with low as 500, 580. You might have to put more down, or maybe 600 and 620. If your score is like 600, 620, you probably will get a nicer interest rate and expect that your rate's going to be a little higher than if you were at say 700, okay? But still, you're going to get into a house, even when someone messed up your credit, or maybe you just had a bad time with your credit, something happened to you that you weren't able to pay some of your bills. You can get in with this. Awesome program. I think a great person for this loan, say, would be a professional, like a young professional who's just starting out. They have some student loan debt and a credit score in the low 6s. I would say that an FHA loan might be the perfect choice. You can buy this opportunity to buy a home with less money up front. I call it like a second chance for homeownership than when a traditional loan can't make it. You can't get into those loans. Now you do have mortgage insurance with the FHA loan, okay? It comes with that. It does protect the lender if you can't make your payments because you're putting less than 20% down like the other programs, but they do charge you, and that could be up to like 3.7%, 3.5%. 3.5% of mortgage insurance. So it does stay on your loan for its entire life unless you put down at least 10%. So it is an extra cost, but it's a safety net for you. So if you are buying that $200,000 house with this FHA loan and a 3.5% down payment, monthly insurance could be like $100 or $150. It's not huge, but it's also it could be a deal breaker for you. But that's what this part makes the loans accessible if you're short of cash. So you can get into a house and always possibly refinance later, which we're going to get into. So are you learning something? Put something in the comments for me if you're learning. If you have any experience with FHA loans, what horror stories have you had? What positive things have you had with an FHA loan? And please subscribe to my channel so I can give you more awesome real deal information. So I did talk about refinancing. Okay, so let's talk about that. You can refinance this loan later if you build up enough equity in your home. You can refinance it inside the FHA guidelines. But you can also just refinance and just switch to a conventional loan, right? You know, it could lower your monthly payments or reduce your mortgage insurance costs. It would be awesome if you can do that, and it will save you money. So just get into the house with something, and then later on you can always refinance. So an example would be if you've been paying off your FHA loan for a few years and you build up enough equity to qualify for your conventional loan, you can do it, and it can lower your monthly payments. You could get rid of that mortgage insurance every month. It's going nowhere. You can't write off anymore. You know, it's a smart way to save money, especially if you're staying in the home for a long time. And lastly, I want to talk about the debt to income ratio. What is that? Well, your debt is how much money that you owe on a monthly basis and your income, right? So for FHA loans, your house payment can be up to 47% of your income, and all debts combined shouldn't exceed 57%. It's wider and higher than it is for very conventional loans, which is great. So if you make, say, $100,000 a year, then you can spend between $3,900 and $4,400 on your debt, so somewhere in that range. So knowing all these numbers ahead of time, understanding this, you can manage your ratio ahead of time, because it will affect whether you can qualify for an FHA loan. So that's why I give everybody my budget worksheet when they first meet with me. We get this budget worksheet. It's a link below. It's awesome. You put all your stuff in there, down to your Starbucks coffee, your sneakers, whatever it is that you're buying, and putting that into that budget worksheet, so you know exactly what your debt is and where your debt ratio is going to be. So if you have a monthly income, say of $5,000, your house payment should be around $2,350. And then they give you that number, that ratio, because then it will give you room for your utilities and groceries and insurance. You don't want to be house poor. You want to stay within that ratio. Don't overextend yourself. I will never let people overextend themselves. It's the worst thing you can do. And if you're thinking about buying a house, and have to look at your employment history, we have to make sure it's a great showing for the FHA lender, okay? Because to qualify, you must be working in the same field for at least 2 years, okay? They look for stability in a field, whether you're a regular employee or a self-employed. They want a solid job history. It helps your chances of getting approved for this loan if it shows you have a steady income. So if you're working in the same job for 5 years and then you own your business for just 1 year, even though you're self-employed now, they'll say, no, you have to be self-employed for at least 2 years. So before you want to get self-employed and do all that, stick with your corporate job or whatever you're doing and show that you're steady income, and then you could go out and venture out to do other things, okay? So it's really just about proving that you can handle the payments and manage your finances responsibly, okay? And there's one other thing I want to talk about is if you want to buy a duplex or a triplex, but for example, duplex the most common that they buy because you can live in the house and rent out the other. It's a great way to invest in real estate and potentially generate rental income. It's been very difficult the last 4 years because all these investors are buying all these investment properties, and it's been very difficult to do this, but it's a great opportunity if you can find one, okay, and to help you cover your mortgage. So if you're living in a duplex and you buy one, say for $300, and you're renting out the other unit, most of that rents are pretty high today, you can use to pay your mortgage. It's just a smart way, okay? And people ask me about condos. Can you buy a condo with an FHA mortgage? Not all the time. You have to make sure that you're working with a lender who has that FHA guideline list of condos. The complex has to meet FHA standards. If it doesn't, forget it. So be smart about it. Understand what complexes you can and can't buy. So if you're looking for a condo, you need to look at with your realtor, make sure you're buying one that's FHA approved, and the lender should have a whole list for you, okay? Otherwise, you're gonna have to go conventional. And people have asked me, hey, what's the FHA loan limit? Can I borrow like $700,000 with FHA? The loan limits vary by location. If you live in a higher cost area, you'll have higher limits. So I put a link in the description for you where you can check the limits for your area. Understand these limits important. It affects how much you can borrow, right? And what your down payment requirements will be. So now the cons. I told you I'd be talking about the cons. One big con here, I mean the pros I talked about, right? In the last 4 years, I would say there's been very few, depending on the area, at least in my area in Philadelphia, in the burbs, I had maybe sold 4 years, 200 and some homes, and not one of them were accepted with an FHA loan because there was so much cash running around, and the conventional mortgages were, buyers with conventional mortgages and cash were winning out, leaving the FHA people on the wayside. If you had an FHA loan, you just weren't able to buy. Even if you, say, put an offer in for $300 and it was $5,000, $20,000 over the asking price, didn't matter. What if it didn't appraise? The FHA appraisers are pretty strict, and they only have a quarter-mile radius. So if it didn't appraise, then the seller would be like, oh, I'm not paying, I want my $300,000. I want the money that you promised me. And then you don't have any more money to put towards it, the deal falls through. And a lot of sellers won't even, I mean, if you're a good agent, like myself, seasoned agent, I'm not gonna let an FHA buyer who has no money buy one of my listings, because I work for the seller, and I gotta tell the seller, this could not happen. So it's really important. The big con is getting your offer even looked at. But guess what? 2025, I see lower rates, more homes on the market, so less competition. And I see prices going up between 2 and 4% nationwide, and a lot of, you're gonna be waiting a long time. So if you wanna buy a house with FHA, talk to a lender who understands the ins and outs. They can take you through the process. I can help you take you through the process. You know, talk to a realtor that has a lender they work with all the time. They can explain your options, help you figure out if you qualify. Now, if you're in Philly in the burbs, or in Jersey or Florida, I have a couple other states they're in, I would reach out to Crista Lowrie. She's an awesome lender. I use her for everything. I trust her. I know she knows the FHA guidelines in and out. She also has some wonderful grant programs, which we talked about, and we're going to be doing a video on that soon. So getting approved for a mortgage is your next move. Getting a clear picture of where you stand and what you can afford. All right, guess you got enough of this FHA stuff. Thanks for watching the Real Deal and Real Estate channel. Hope it cleared your mind about FHA's loans. And if you please subscribe to my channel, I need your help. And if you want more straightforward real estate news, have a great day.